have the political row edging out some foreign investor participation as, we've got being tested the fragility of the coalition government. And it seems like I ask you this question every Monday, but it's really hard to ignore. How are you reading the political climate and the impact on the markets as things unfold?
Well, the shilling is, as you said, at an 8.5-month low. The stock exchange has retreated to 4267, down over 10% from the 2010 high. It's the level of interference is now, tipping over the tolerance level, and I think you're seeing that play out in the Kenyan asset markets. I think what everyone is concerned about is the nuclear option being a snap election. And that's not going to help anybody at this point, especially the economy. So the concerns are real, noise levels are extremely high. One senses that both sides are digging in and preparing to slug it out, and it's just not helpful to the stock exchange or the shilling at this moment.
Well, at this stage, we're going to have to wait and see how things unfold, and keeping the markets busy and slightly more upbeat seems to be the results announcement that's filtering through. We had East African Breweries out with numbers on Friday, and we were waiting for a read on domestic consumption trends and how much impact those more stringent rules when it comes to alcohol selling, has had, or the kind of impact it's had on that company and its earnings. What were your overall impressions there?
Well, I think, although the EPS was down just under 10% compared to the previous year, I think they beat the street expectations, actually. The street was very concerned that domestic consumption had slowed down considerably. I think they did much better than everyone expected. We got a sneak preview when Diageo, of course, released their results a little bit earlier. So I think on balance, the share price is fairly priced around these levels. I think they continue to expand regionally. The Serengeti story is a strong one. They're talking about Uganda. I think, they're probably looking at Ethiopia as well. So on balance, I think, the news is in the price. We've retreated from about a 227 all-time high in the first week of January to this level of 189. And I think that's pretty much, it's all in the price now for EABL.
Well, certainly East African Breweries not alone when it comes to stricter regulation. I was going through a newspaper headline this morning where South African Breweries, has criticized the Western Cape provincial government over on this end for planned new licenses laws that the brewer says could well worsen the alcohol drinking problem here in that region. In the meantime, taking a look at one of the earnings reports being eagerly anticipated this week, Barclays Bank. Your broad expectations on that front?
Well, Barclays is interesting. I mean, it came off a 2.5-year high of 70 that was printed last year. We're now around 62. We hit a low of 55.50 in December, from which we bounced quite sharply. I think, some investors were hoping for a special dividend or distribution post the sale of the custody business to Standard Chartered. I think Barclays used those funds in order to reduce their staff headcount. They announced they're going to cut 5% of staff at the back end of last year. I think, Barclays might surprise a little bit to the upside. I think investors have become way too defensive. It's a strong franchise. It's a solid business. It's well managed. And I think on balance, I see the price having some headroom, not a huge amount of headroom, but about up to 65, 66. I'm looking for a 10% to 12% increase in the EPS year on year.
While banks in general have been pretty aggressive in terms of their regional expansion strategies, Aly Khan, Barclays seems to have been a little less so. Is it a case of, we haven't heard much of their expansion strategy and they seem to be lagging the likes of Equity and KCB in that regard? Or is the bank entrenched enough with more of its global operation?
The nature of Barclays, you must remember it's majority owned by Barclays PLC, is that this Barclays Kenya unit is a standalone unit, and as far as I'm aware, Barclays PLC has no intention of geographical expansion for the Kenya unit. So really, if you're buying into Barclays Kenya, you're buying into the Kenya story and no more. I can't see them changing that strategy. It's very much an embedded strategy that we've seen, and I think geographically they're constrained, and I think that's something that shareholders international shareholders should be aware of.
Yeah, well, we had Absa Bank out with numbers early last week here in South Africa, and the bank, which has a partnership with Barclays, stressing the point that they have more of an Africa focus in play, and it's going to leverage off Barclays' muscle in that regard moving forward. So the road ahead may well get pretty interesting on that front. In the meantime, Aly Khan, when it comes to the mid-tiers, we've got NIC Bank this week in the spotlight. Are you differentiating starkly between the big caps and mid-tiers at this stage?
Absolutely, and NIC and Diamond Trust are probably the standout counters in the mid-tiers. You've got the low base effect. You've got NIC has expanded into Tanzania. It's very well managed. If I extrapolate the third quarter results, I'm expecting very strong results from NIC. And I think the price earnings ratio will probably be around 10 post the results. I think we've come up considerably. We're at 50. I can see the share price rallying another 5 to 10% off some very strong results, which I'm expecting, unless something strange has happened in the final quarter. And typically, the final quarter tends to have a stronger bias than the first 3 quarters. So strong results expected from NIC for sure.